You worked hard your whole life, raised a family, paid off loans, and finally looked forward to peaceful retirement. But peace disappears fast when health expenses arrive uninvited. The truth is, we can't stop medical emergencies, but we can stop them from draining our savings. One health emergency, one surgery, one bill, and suddenly decades of savings vanish. After 60, this is not a rare story. It's reality for thousands of seniors every year. After 60, medical expenses aren't a what if, they're a certainty. But with the right plan, you can protect your savings and your peace of mind. Plan today and stay stress-free tomorrow. Create a dedicated health emergency fund. Keep 6 to 12 months of expenses separately, around 2 to 3 lakh rupees for most retirees. Think of it like a personal health cushion that gives you breathing space during emergencies without the stress of breaking your fixed deposits or selling your investments in a hurry. Don't touch it for travel or gifts. It's for medical emergencies only. Park it in a liquid mutual fund or sweep in FD for quick access and better returns. A liquid mutual fund gives you slightly higher returns, usually 6 to 7%. And you can withdraw your money anytime within 24 hours without penalty. A sweep in FD, on the other hand, automatically converts your extra bank balance into small fixed deposits. So you earn FD level interest, but can still access cash instantly when needed. These options keep your health fund growing quietly while staying ready for emergencies. Because when medical bills come suddenly, every rupee and every hour matters. The health fund is your first defense against emergencies. Before insurance paperwork, before hospital claims, it's this fund that steps in first. Fast, simple, and stress-free. It's not just money in the bank, it's freedom from panic. Because true health planning isn't only about treatment. It's about staying financially strong when life tests you. Choose the right health insurance. After 60, your health insurance isn't just a policy. It's peace of mind on paper. Many seniors make the mistake of either skipping insurance or holding on to an old, low-coverage plan because they fear higher premiums. But here's the truth. One hospital stay can cost more than 10 years of premiums. Go for a senior citizen policy with 10 to 15 lakh rupees coverage, no room rent cap, and lifetime renewal. Make sure it includes pre- and post-hospitalization, daycare procedures, and no hidden limits on room rent. And don't depend only on your children or an old employer's policy. Those may not last forever. This is your personal safety net, your own financial independence during medical emergencies. Because when health problems knock, you don't want to be counting rupees. You want to be focusing on recovery. Remember, your employer's policy ends when you retire. Top up and a critical illness cover. Once you have your main health insurance in place, it's time to add extra layers of protection. Think of it like wearing a raincoat, but also carrying an umbrella. That's where a top-up policy comes in. It extends your coverage at a much lower cost. For example, if your main insurance covers 5 lakh rupees, a top-up can give you an additional 10 lakh rupees or more without doubling your premium. It's smart, affordable, and it makes sure one big hospital bill never empties your savings. And here's another must-have after 60, a critical illness cover. This plan gives you a lump sum payout the moment a serious illness like heart disease, cancer, or kidney failure is diagnosed. You can use this money however you need. Hospital fees, medicines, travel for treatment, or even home recovery. These two shields together, top up and critical illness, ensure that even the costliest health surprises don't shake your financial stability. Because life after 60 should be about rest, faith, and family, not about worrying how to pay the next medical bill. Budget monthly for health. Health expenses don't just happen in hospitals, they quietly appear every month. A few medicines here, a doctor visit there, a lab test once in a while, and before you know it, that's 3,000 to 5,000 rupees gone. That's why it's so important to budget monthly for health. Just like you set aside money for groceries, electricity, or temple donations, create a small, separate budget just for your health. This amount should cover your routine medicines, regular health checkups, and preventive care. Because prevention always costs less than cure. Think about it. A simple 2,000 rupees full body checkup once a year can help you detect issues early and save lakhs later. So treat your body like your home or your car. It needs regular maintenance to run smoothly. Don't wait for something to break before you take care of it. After 60, budgeting for health is not an expense. It's an investment in peace, strength, and independence. Preventive care is cheaper than emergency care. A 2,000 rupees test today can save 2 lakh rupee tomorrow. After 60, your body needs maintenance, just like your home or car. Invest for health security. Once your emergency fund and insurance are ready, the next step is to invest for health security. To make your money, quietly take care of your future medical needs. You don't need risky investments or fancy stock tips. After 60, your focus should be on safety, steady income, and easy access. Park a portion of your savings in reliable options, like the Senior Citizen Savings Scheme, Post Office Monthly Income Scheme, or short-term fixed deposits. These instruments give you stable interest, often around 7 to 8%, and guaranteed returns. You can even set it up so that the interest you earn each month automatically pays your health insurance premium, medicine bills, or doctor visits. That way, your investments take care of your health while you take care of your happiness. If you're comfortable with technology, explore debt mutual funds or balanced funds for slightly better returns, but always consult a financial advisor before choosing. Remember, this isn't about chasing high profits. It's about creating health freedom. Because when your health expenses are backed by your investments, you're not depending on anyone, not even your children. That's real peace of mind. Let your money work for your well-being. Medical costs are a part of life. We can't control when illness comes knocking, but we can control how prepared we are to face it. Remember this. Financial stress is optional when you plan early and plan wisely. Build your health fund, secure your insurance, and let your savings quietly take care of you, just like you once took care of your family. Because after 60, wealth isn't counted only in rupees. It's counted in peace of mind, independence, and the freedom to focus on living fully. True prosperity is waking up each morning without fear, knowing your health, your finances, and your future are all protected. So plan today and live your golden years with the dignity, comfort, and calm you truly deserve. Plan, prepare, protect. If this video helped you, like and subscribe to TechPaati, your guide to finance, health, and happiness after 60. Share this with your parents or friends who need this advice. Tell us in the comments, how are you planning your medical expenses after 60?